Welcome everyone to Vested Interest. This is Shane, and as we wrap up January, guys, there's a particular sector of the market that has kind of run up with the recent market shift or transition from high growth, high multiple stocks into more value plays. One of the areas that typically gets shifted into is the consumer staple sector. So a lot of these stocks I have in my portfolio I haven't been adding to because they've kind of run up a little bit. But I'm hoping that some of these will come down over February where I can continue to add to. So I wanted to cover the 5 consumer staples that I'm looking to add to if there is a pullback in February. So let's get right into the video. The first one, guys, Cisco Corporation, ticker SYY. Currently, at least at the close of business Friday, February 25th, was $87.25. Looks like it did dip down a little bit in the after hours, not a whole lot. I mean, 0.08% is nothing to write home about. So you can see here the 52-week range, $68.05. That's around where I was adding to it here last year. And currently it's at $87.30 and definitely right at that 52-week high. So we'd look to see this pull back more towards that 68.05 before we would want to add to anything. But this is the first one that I'm looking to watch. It does have a forward dividend yield of $1.88 and, or I'm sorry, forward dividend of $1.88 and a dividend yield of $2.15. Now their 1-year estimated target is 89.17, so they do see it continuing to go up, I guess, over the year, but that's not a whole lot of appreciation. And like I said, I'd love to get this closer to that 68.05, and that would increase the dividend yield to probably closer to 3% if it dropped down to that range, which is what we want, a higher dividend yield. Number 2 on our list, Colgate Palmolive, ticker CL, and that's at 78.14 as of close of business February 25th, last Friday. Again, you can see it's definitely come up over the last 6 months. It has pulled back a little bit here, but still definitely higher than where we'd like it. And at $78.14, its 52-week low was $74.01, and its high was $85.61. So it's not super high off its 52-week low, $4 more per share, but I'd love to get it closer to the $74 range. And then you can see here the forward dividend is $1.80 per year with a 2.3 dividend yield. And I think if it dropped back down to the 74, we'd get that closer to 2.6%. They do have a 1-year estimated target on this one of $87.31. So they do see some appreciation, stock appreciation, and all this information is coming to you from Yahoo Finance, guys. So if you Googled this, you get the same type of information. As you can see, it ran up here and then it has pulled back a little bit. But again, I'd love to get it at the 74 or even below that $74 mark. So we'll see what happens over the next month with Colgate Palmolive, ticker CL. Third on our list, Procter Gamble Company, ticker PG, currently $158.24. Again, looks like it pulled back a little bit in the after hours last Friday. But 52-week range, the low 121.54, high of $165.35. So again, not at the high at 165, but definitely a lot further away from the 121 low than it is the $165 high. So I think I was adding it in the 128 to 130 range. Again, this is 158 is pretty high for Procter & Gamble. The forward dividend payment for the year is $3.48. It does have a dividend yield of 2.20. I think if we got back down to this 1.2, $121 range, probably be closer to the 2.8 to 3% dividend yield. Again, 1-year estimated target is $165.63. Procter & Gamble definitely has, all these really have pricing power. So as you've seen some of the higher inflation, most of these consumer staple, and that's why people gravitate towards them. The consumer staple sector in general, it's stuff you're going to have to buy. Procter & Gamble sells a lot of stuff like soaps and shampoos, laundry detergent, that sort of thing. So it's stuff you need unless you want to stop washing your clothes and washing your body, stuff like that. So tissue paper, stuff like that. So again, you can see it ran up here. It's kind of run sideways for a while as people transitioned out of the higher multiple stocks. So Procter & Gamble, that's our third stock out of the consumer discretionary or consumer staple sector that we're going to watch. Next up, General Mills, ticker GIS, currently $67.99 as of close of business Friday. We'll see what it is tomorrow morning. I'll release this video for about 8 a.m., 8:30 a.m. tomorrow morning, which will be Monday, February 28th, last day of the month. And again, $67.99 is the current price. 52-week range, it had a low of $54.31. This is around where I was buying it, maybe even a little lower in the 53 range. High of $69.95, so definitely much closer to that $69.95 high. Again, another one we want to see pull back before we add to it. Forward dividend for the year, $2.04. A dividend yield over 3%, so it is our highest dividend yield even currently at the $67.99. But again, if this pulled back closer to the 54, I think you'd see this dividend yield creep back up to 3.4, 3.5 range, 3.3 range maybe, or 3.3 to 3.5 range. And as you can see, guys, it has steadily climbed since last August during that rotation out of the higher multiple stocks into more value, into safer stocks to kind of fight inflation. Another one, General Mills, has pricing power. A lot of dry goods, the granola bars that I use, the cereal that I eat, a lot of things like that. So this is another food company that, again, unless you're going to stop eating cereal or stop buying some of the grain products that they provide, it's one people are going to continue to buy even with higher inflation. And last on our list is a Warren Buffett staple, the Coca-Cola Company, ticker KO, currently $62.85. 52-week range, low of $49.40, high of $62.90. So again, right at that 52-week high. Forward dividend payout of $1.76 for the year, and a dividend yield of 2.8. And again, guys, at $49.40, it would be most likely over this 3% dividend yield. So this is another one we want to see pull back. I don't think that people are going to be, stop buying Coca-Cola products, beverage products. Good times and bad times. It's one I like to have in my portfolio. Like I said, it's definitely a Warren Buffett stock. They do see a one-year target estimate of $67. Which so speaks to some price appreciation, and obviously another one, if you've seen the price of beverages anytime recently, has pricing power even with higher inflation. They're able to raise their prices up and people continue to pay. So guys, those are the 5 consumer staple stocks I am looking for pullbacks on for February, or hoping for pullbacks on in February. We never know what the market's going to do, but if they do pull back, I would be looking to add them to my portfolio. Appreciate you guys stopping by to check out the video and check out the channel. If you like the video, give me a thumbs up. If you don't like the video, thumbs down. Drop a comment down below. Let me know what you're looking at. Do you own any of these companies? Are you looking at anything in the consumer staple that's not in this list? Love to hear what's going on with your portfolio and what you're looking to do. Again, thoughts and prayers go out to the people involved with, or have any family members involved with, the Ukraine incident that's going on right now. Hopefully that wraps up quickly. Really impressed with the way the people are standing up and fighting for their country. So hats off to those guys, and definitely sending prayers out to them to stay out of harm's way if at all possible. Drop a comment down below. Let me know what you think. Share the video with anyone you think might find value in the video. Consider subscribing, guys. I pretty much I just cover dividend growth stocks, my portfolio in dividend growth stocks on this channel. So if that's something you're interested in, definitely hit that subscribe button and hit that notification bell so you are aware of when we post new content. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you next time, guys. Thanks for stopping by. Appreciate it. Take care. I am not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria. Or seek the advice and counsel of a certified financial advisor.